All right, good afternoon, everyone. How are we doing today? Thank God it's Friday. We're back on the training, as I promised, that we're going to have a wonderful opportunity to be able to have something great at this very time. Wonderful to have you on the platform, and today it's going to be almost the most shortest webinar ever I've had with you because I'm actually going to just go straight to the line, and as I want to just keep this webinar very, 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 very short, and also I want you to understand that as I talk to you, I know what I'm talking about. So if I don't know, I won't be training you most times, and I make profit, and that's why most times I can tell you how it is. All right, so and that's why it is only the people that knows what they do and they make profit, and that's exactly those same people that can tell you how to go by all these things, and that's why we're training you. We're trying to make everything possible for every one of you. Now, many of you says you don't know how to trade, you don't know how to trade. So today I'm going to train you one singular pattern, and the singular pattern that is actually going to help you to have the wonderful time. This is an advanced section, so we may not allow babes in the house, but you can still revisit the video at your own discretion, and watch and watch and watch. And what I want to show you on the platform today, sincerely speaking, I just want you to go over and over and over and over again and see if it is true. I want you to see if it is true. Some people have asked me how to scalp, how to scalp. So I just want you to go and come and see what, you have asked me how to scalp. So that's why we're putting up this webinar. Of course, I'm still going to have a powerful scalping webinar training whereby I'm going to be training everyone on that. So if you can hear me, please, I just want to use this medium to ascertain the fact that you can hear me before I just jump into the training straight away. Okay, so if you can hear me, please just signify that you can hear, and I just have to just jump into the webinar straight. Okay, I'm waiting, I'm waiting, I'm waiting. All right, so if you can all hear, now this is Moses. I know that you can all hear me now. So this is Moses. I'm just going to go straight to the webinar. As I said, I'm not going to keep long. So you have to just grab everything within this shortest minutes. I want to make sure that it's very short so that you can watch and watch it over and over again. Now, as you know, that a lot of times you may not have confidence in trading. So you want to know high probability trade. High probability trade in the sense that the real thing that you're looking for, you want to get it. And you want to know that this trade actually will play out. Now, I'm going to term it, this is the title of this webinar is building your confidence in your analysis. You want to build your confidence in your analysis, and that's why I'm going to show you this. Because I noticed that many people have been asking me, Moses, how do I know that this thing is going to buy? How do I know? You don't need to know. It's a scalping method. You don't need to know. What you just need to know is is what the price is actually looking for. Now, I'm going to show you just one single slide. I'll go to the chart, and I'm going to show you that this same thing happened this week. It happens every day. Every day, if you know how to look for it, you will find it in one particular pair or the other. If you can't find it in indices, you will find it in the stock market. If you can't find it in stock market, you find it everywhere. It's everywhere. It's indices, it's in forex markets, it's in commodity. If you know how to find it, and I'm going to show you now. All right, so just watch what I'm going to show you. As you see this screen here, this thing happened many, many years ago. This chart that you're looking at, apparently, I think this happened around, I think it's in 2016, this particular one. I think so. So it happened 2016. This is a daily chart. So I actually picked this for you so that it happens every day. This chart is about, as you see it here, let me quickly say something before I go further. And now, let me quickly make this clear that this market, as you can see, is on the higher time frame. Whatsoever you see on the higher time frame, price is fractal. Price is fractal. So now, what does that mean? When we're talking about fractal, it means the same thing you see, the same thing that price will do on the higher time frame, price will still do on the lower time frame. The same thing. The price will do on the high time frame. If you go to the lower time frame, that's the same thing you will see. You will actually see price action more often. And when you see price action more often, what that is trying to say to you is that the price is trying to show you what you are likely to see. That means the reaction of what the price is doing on the higher time frame, you will see it better clearly in the lower time frame. So simply put, that if you are actually looking for price action, whatsoever you see on the higher time frame, if you see 3-bar pattern on the higher time frame, to go to the lower time frame, you're going to see the structure. Price is fractal. Fractal simply means a smaller version of something that actually look like that thing. Now let me give you an example of that. A single tree in front of your house. If you pluck one of the stem of it, or maybe one of the branch of it, and you look at that branch very well, if you go a distance away from that tree and you look at that branch that you have, and you look at that tree, it will look exactly like that tree. Now let me give you another one. Now if you look at you and your own children, you will notice something that you look like, your children looks like you. They are a fractal of you. So, which simply means that fractal is everywhere. Price, the same thing you have seen here, price will do the same thing more often. Now, I'm going to train you on how to buy into liquidity and how to trade on liquidity. Now, I'm going to show you only one pattern here. I'm going to show you only one pattern. And that pattern, because I'm not going to show you too many patterns, I don't want to get you confused. But only one pattern, then subsequently, I'll be showing you more often what you are going to be doing. Even if it is only one pattern you know. And you know it like the back of your finger, like the back of your palm, of your hands, of your palm, you know. Even if that's what you know alone, and that's what you trade, you don't need to need no many strategy. If you have many strategy, you get yourself into trouble because you'll be confused. But if it's only one particular strategy you're looking for, and you know that particular strategy, like anything, just like anything, that's when you see it, you recognize it. Sincerely speaking, you'll make profit in this market. You don't need to know as many as possible. You just need one single pattern that works, and this one works. So now let's go through it. Now, as you see it here, you can see price was actually coming. This is a daily time frame. Each of this candle is daily. So as you see, price was actually coming. Initially, you can see a gap here. Now price came back, retested after gap up, tested to show that the price is actually going to buy. So it gap up immediately. So as price gap up, you can see as gap up, the price retraced back to that same level. You can see what level is that? That's 58.92. Okay. Now price retraced back, and price was now moving on. At a point into this note where price that actually gap up the other time, and price have his way. Now this is what this is upward move. Now at this point, price, because we cannot see the weekly or monthly time frame, price actually hit a resistance here, met a resistance, came down. As price came down, remember, see how it touched that same resistance again, support again, touch it, to the point, and price went back up. At this point, the resistance up there becomes very strong. Now, I want everybody to look at it. Now, I want you to look at it. This is the second time this price is hitting this top, forming what we call double top. You see, a lot of times when trainers, people that trains, they always want to train to show people that they know how to train, to know how to make money, you know, and so many other things like that. But they will never show those people that, you know, that this is what I've been doing. So exactly what I want to show you now is what I am going to show you today. It happened this week. It's happened a lot. I'm only going to show you one of it. Now, as you see this double top, this is the first top, this is the second top. At this point, a lot of people will be saying this has formed a resistance, so price will never be able to break it. So that's what people will say. Okay, and now look at what happened. But I'm not talking about this now. And in fact, what I'm going to tell you is not even around this place, is down here, somewhere here. Now, so you have to listen to me carefully. Now, what happened here? I want you to notice something. The big funds, the smart funds, the people that have big money, the banks, they are the people that went short here. So it's not your small money. It's not our own money. It's not the speculators' money. It's actually the big banks' money. So now, they went short here. Now, can somebody just tell me, where would their stop loss be? If somebody went short at this point, down here, where will a stop loss be? Can you please tell me, please? I just want to know if I have my audience. All right? Where will my stop be, please? Where will they stop? If I'm shorting, if I'm going to sell, please, if I'm going to sell at this very arrow part, where would my stop loss be, please? No, I'm not buying. I'm not buying. I'm selling. I'm selling. If it is 58.92, that means I'm buying. But I'm selling from that top above. I'm selling above the resistance. So where will my stop loss be? I'm selling where that arrow is, on top, the first arrow on top. I'm selling there. So where will the stop be? I just want my answer, please, before I move further. Perfect. Perfect. Olusegun, you got that. You got that. My stop loss will be slightly above 162.52. Slightly above 162.52. Now let me show you where my stop loss will be. Now, please, that's why you have to reason. You have to reason so that you understand this very well. Now, if I'm going to sell from here, from this top here, my stop loss will just be above, somewhere here, around here, possibly 163.55. That's where my stop loss will be, because I won't be risking much. I want to just risk little. My stop loss will be somewhere here. Then, because I'm selling, you understand? Now, as a result of this, and the price didn't break that level, I will have more position to sell more, saying that it will go down. Saying that it will go down. Now, because it has formed double top now, and this resistance, there's a resistance here, a very strong one. Now, and the price hits that resistance the third time. Look at it. First time here, second time here, third time here. But how many times did it hit the support? It hit the support twice. So we simply mean that this resistance is prevailing. This support is prevailing as against this resistance. Now, please hear me. As a result of this, you know, we have a lot of stop loss there. Now, I'm going to show you something. It has happened down here. You can see this low, see this price low, see this price low. Apparently, it's what we call double bottom. Apparently, double bottom. Now, when price was coming down, you see what happened? It went back up. People would have thought that it's going to go up first. If the price will actually go and take this up, it must first raid the people that actually, you know, have their stop down here. This is what this market is all about. It's all about manipulation. And that's why I hear a lot of people that says, why manipulating in the markets is not this, is that. It's not the broker that manipulates, it's the game. It's not the broker that manipulates. It's the game. You must understand the game. That's how you have to trade. Now, the game of the trade is that everybody wants to make profits. So everybody is like fighting. If you think you are a cat, there is a lion in the market that is able to take you up. You understand? So that's why you must understand. Now, look at this. Everybody knows that there's a stop here, because those people that went by here, that took a buy here, took a buy position here, this is where their stop will be, a little bit below this. Now price came back, they would have added more position to it. So there will be a lot of stop here. Not only stop will be here. Some people will be thinking that if this price, you know, I'm going to speak some of your mind now. Some people will say they'll put their sell stop down here. That if this price can break down and break this level, it means it's going to continue to sell. So as a result of that, they will put their sell stop down here. They will put their sell stop down here, below here. And also the people that bought from here, from this down, and bought also from here, this will be where their stop will be. So we have a lot of liquidity. This is what we call liquidity. The people that think that if this price, you know, break below this resistance level, is actually going to continue to sell, they will put their sell stop here. Now, the people that bought from down here and the price went up, their stop will be here. So the people that bought here too, they'll stop over here. So we have a lot of liquidity down here. Now, as price will be coming, the market makers, they know that stops will be down here. A lot of stops will be down here. So what will they do? They will come down. Look at it. They deceive people as if they will go back up. You know, a lot of people will still buy again. Now they are accumulating. They are accumulating. They will buy again. Stop will be plenty here. A lot of stop will be plenty here. So a lot of people that will be thinking if price breaks down, they would have accumulated a lot of stop, a lot of stop loss, a lot of sell stop here. Down here will be a lot of liquidity because this is higher time frame. Now look at what happened. The people that have their stop there, they will be rated. Bam, at this point. Can you see that? Just like that. They will just be rated. Just like that. They will hit out their stop. The people that have their sell stop here, they will be triggered. Now, immediately they trigger them. See what happened to this candle immediately. It's rejected immediately, came back again, rejected. Some people still think there's hope. Maybe the price will still come down. Look at that. As price came down, at this point, you just notice that it's rallied immediately. All the people that wanted to sell below here, they are trapped in the market already. So they are trapped. All the sellers, they are trapped in the market. Now, what will happen? Now, as soon as the trap happens, the price will come back here for a fair value. A lot of people that now know that, oh, this market will no longer come down. The sellers, all of them, they are no longer willing that they want to stay in the market. So everybody will begin to close his position. As they close their position, all the sellers will close their position. It will be left with the buyers. And what will be left? Buyers will push up the price. And that's why you see push up in the price. So if you can interpret your market very well, you will understand what I'm saying. So now, I've just told you what happened there. The same thing happens in this area. There are a lot of liquidity here. But this time around, you want to buy into liquidity. I'm going to tell you a few things that will help you to be able to buy into liquidity. It happened both sides, but I'm going to concentrate on this. All right. So henceforth, a simple strategy. I've just explained what happened here. Now, a simple strategy that you now begin to look for everywhere. You look for a point where you have double top. Where you have double top. It happens every day, so don't think that you're not going to get set up every day. But I'm not saying that you should trade every day. Please don't misquote me. I'm only trying to say that when you find a setup, at least 1 or 2 hours in a week, if you have taken your trade, you have taken your trade. So you don't need to stress yourself. Now, as you see double top here, I want you to see what happened. You will look at the last up candle there. Inside that up candle, they are going to do what we call accumulation. This is your trade. They will do what we call accumulation. Now, it is inside this particular candle you will be buying. All you just want to buy is from this candle to this line and a little bit up, maybe 20, 30 pips upward. Now, that's all you just need. From this candle down to this place is about 70 pips or 100. From this candle to this place is about, let's look at it, 61.51. It's even more, 61.51, 61.51, 62, 19. That's about 70 pips. You are it's about 30 bits, possibly around this place. So this is now what you will look at. Anywhere you see double top, you wait for price to reach the equilibrium area, the last down candle, the last up candle. Sorry, the last up candle. This candle, the last up candle before price begin to come down. That last up candle. Inside that candle, there will be an accumulation. Now look at what happened. Price moved into that candle. What happened? They created a fair value for you. As this price comes down, as that candle comes down, inside this candle, this retracement, that's where you are going to be buying. That's where you are going to be buying. Then you go to the lower time frame, which I'm going to show you, to wait for market structure break. You buy into the liquidity, and that's to take profit above this double top. This is your trade. It happens every time. This is your trade. Most times it happens on 1 hour, it happens on 4 hours, it happens on daily. But when it happens on daily, it's going to be a very long trade. But when it happens on 1 hour, it's going to be a quick trade. Sometimes it gives you about 70 pips, 50 pips that are immediately. So I'm going to show you right now what happens. Before you start asking me question, okay, is the video off? Did you see what I just explained now? Did everybody see what I just explained? If you see, please, can I hear you? Yes. Okay, you didn't? Yes, everybody saw that. Everybody saw that. You will get that in the video. Don't worry, I'm still going to explain it again. Let me just explain one more time. Now, you look for double top everywhere. You look for double top everywhere. Now, by the time price is eating, look at what happened here. Price has taken liquidity somewhere. Sometimes it may hit from a block. It may be coming from somewhere that is not ready to go down. Then price is going up. As price eats that last up candle, you can see last up candle before the price drop. That is where you'll be looking at. When price eats there, there is going to be a reaction. Inside this down candle, that is where your trade is. You look inside this candle where there's going to be a structure break in the lower time frame, which we call 15 minutes. Then you wait for market structure break. You buy from that into the liquidity. It is almost, it is a very good market, which means you know for sure that they are going to raid on that liquidity before any rejection. And you can see what happened after they have taken their profit up. Look at what happened. This one is even tradable, but we'll be talking about this in another setting entirely. Okay, but let's go to the chart and see how it happened this week. Now let's go through it. This happened today. This happened today. This is double top. This is double top. This double top happened because it's a higher time frame. That's what I'm showing you. This happened. This first one happened. Okay, 14th of March, 14th of April, 14th of April, and this happened 30th of April. So now this is June. You can see exactly what I just showed you now. It happened every time. This is this year, but that chart wasn't this year. This is this year. I can show you many of them on the chart, but all you just need is just to see what I'm showing you now. You'll be able to get your trade every time. You can see price has just taken it. Now, let me show you quickly what happened. As you are expecting this, look at the price level. The price level is 126.50. So you put your line there. Now you'll be expecting which of the market, which of the drop down is your trade. Look at it as price come, hit into this. See that drop down. This is the drop down. This candle. This candle. You'll be expecting a reaction. Look at the first time they came, second time, look at it. They came into that candle, that last candle, this down. This is the last candle now. You can see this one is higher than this one. This is the last one. Now, they came into it. Look at that drop down. This drop down that you are looking at is not just ordinary drop down. It's a very massive one. I'm going to show you because this is daily time frame. So now I'm going to actually mark that place. Once you notice that price is entering into that point, now you are waiting for your trade. The drop down happened yesterday. So you can mark that up just like that. Okay. Then let me just, okay. All right. Okay. Now that's exactly where we are going. Now you can now go to lower time frame, 4 hours. You can see as price reached there, look at what happened. Drop down heavily. And as it dropped, that's where you want to begin to look for market structure break. Now, actually, I have seen the market structure break here, but you know, I want you to see it well. So you can go to 1 hour. Then it happened yesterday, just for a scalp. Just for a scalp. That is it. So you're looking for this line. Look at this. You already see your line. So you're looking for when any trade you're going to take, you're actually going to, you know, you're actually going to wait until the trade move above this. So which means you'll be taking your profit on this candle. And I'm going to show you immediately. Now, as you go to lower time frame, now let me make it small so that you can see what I'm saying. Lower time frame. Now, before I go to lower time frame, let me show you. This is where it hit the last up candle. This is where you can see it retested several times, and then price drop down. So it is inside this drop down that you'll be looking for structure to take to buy into that liquidity. Now, all you just need is just structure after it has hit that level, because you know they will not go down until they are taking that liquidity. Now, please watch this. 15 minutes. Now we are still in the market. Watch this. Watch that happen. The price was dropping until yesterday. It dropped down. Watch what happened. This was an intraday low. It's an intraday low on 1 hour. I want to show you. Look at that low. This was Wednesday's low. This was Tuesday's low. So which means price actually broke some structures, showing that at this point I am going down. Watch that, please. This is what we call, I've been explaining this most often. I just need you to understand it well. This is another low. You can see price broke that structure. Many people would have been selling by now, thinking the market is going down. But for somebody like you now, you will say, I know that this liquidity up here will not go. If they have taken it, they may come down. Of course, we're expecting a fall from next week. So which means that we're expecting market to fall from next week. So because you know, it has actually taken this, so they are not going to allow the people that are triggered, so they might actually come down, retracing down next week. They may continue later, but they will first come down. Now, if you look at this very well, you will notice that they dropped down. So they are broken structure. They broke the low of Wednesday. They broke intraday low on Tuesday. So a lot of people would have been selling that, oh, they are going down, they are going down. So they were selling. But now, watch what happened. At this very point, watch what happened here. As price dropped down, within that same day, look at it, this is the low. They even took out the low that they made during Asian section. They ranged, took out that low, which simply means that they seriously mean that business. But look at what happened. As price, I want you to see, as price traded below, I want to make this small so that I can use that. Okay, so let me now use it. Okay, now look at this high. This is an intraday high. This is a low, intraday low. Price broke that level. Immediately, price went back and broke that high, intraday high. Structure has broken. Initially, at this point, structure was broken. So let me take this out. I've done the illustration with that. Okay. Now this is another one. So let me just quickly now begin to show you what happened. It happens every time. This happens every time. When they are going back, if you don't see the structure, please don't take it. Don't take it. You wait for the structure to form, and after it forms, that's what you'll be expecting. So that is what we call MSS, market structure shift. This is another market structure shift. At this point, you'll notice first happened, they broke down. So possibly you'll be watching. Are they going to continue to go down? All right. So they came back up, you'll be watching. You have no trade at this point. You don't have any trade at this point. At this very point, you don't have any trade. Now, you'll be waiting. You will think that they will still go down. You don't have any trade because you're not sure of what happened at this time. Now, if they go down to break this low, then you know they are going down. What you just need, if they go down, if they actually go down from here to break this low again, then it means that they have left the liquidity. They don't want to come. So you just wait for a retest and you short it. You shut it down just like that. You wait for a pullback for a good entry. Possibly you use your feet from here, draw it down to the low they make. You look for 61.8% level and you shut it from there. But that's not what they did this time. That's not what they do. Immediately, I'm going to tell you the scenario that you're going to be buying with. Now, this is now the buy. Now, look at it. Look at this high. I don't want to stress you, but let me quickly stress a little bit. If you make it big, bolder, I want you to see that you will see another double top there. I want you to see that. See that? See this high? Can you see this high? Can everybody see me? Can everybody see what I'm showing, please? If you can't see, I just need to, please, can you see what I'm showing? Can you see it? I just need two people to say yes. Okay, yes, good. So let's go through it. Okay, good. So now you look at this. Look at this eye. Can you see that's double top? Can you see that? All right. Watch this also. Can you see? This is. It doesn't really mean they must be equal high. No. So, you can see it is not broken. So you can see this eye they made and this eye. Can you see? They have not been touched at any time. They are double tops. Now, price will always locate double tops everywhere. If you want me to show you, look at this one. Look at this down candle. Look at this other one. Price came for it. I want you to see something. Immediately, this price took out this. It came for this double top the first time. If you can read your price, you can see. Then it jumped up. It's rejected. See what happened when it took that double top out. This double bottom. Sorry, when it took it out. What happened to price? It rejected. In fact, it went up a little bit before it came down. So we simply mean any double top or double bottom, price will always react there. Let's look for another one. See this one? Can you see? When you see double bottom, see what happened? Price came to the last down candle. As price hit there, it dropped back. This is your buy. This is your sell. You can see this double bottom. Can you see this double bottom? As price came to the last down candle, this is the last down candle. Inside that candle, they rejected. This is where your trade is. Now, immediately inside this trade, you can see if you sell, you'll sell to take your profits below this double bottom. You can see that. So I'm just showing you so that you can see what is the potency of this. Now, let me now show you quickly. Look at this double bottom. Can you see this? 1, 2. You can see that. So as price was moving, consolidating, they created that double bottom, showing that they are coming down. but you don't know, maybe they are going to come down immediately. So now look at what happened. This is a top. So I'm going to reduce it now so that we can see it very well. Now this is a top, MSS. So this is where the top is. Price move, broke it. Initially they are broken low, but now they broke the high. Immediately they have broken this high. They break this high. We say market structure break to the upside. Now they have given you a potent buy signal. Now what do you now need to do? Look at it. Price broke the low. Price went ahead, broke the high. Shows that they have changed their direction. They are going for that liquidity. Now what will happen? You now take your fib. For many people that do not know how to know fib, you can see. But for me, this price would have been, as price move up, this is a drop down. I would have taken it from here. But you can also take it from here. But this place would have been better. But no problem. You can take it from here in case you are just starting with Fibonacci. All right. Look at the high of that candle. So you take it from the low to the high. You can buy from 61.8%. You can buy from 61.8%. You can buy from 70.5. You can buy from 79. But so that you don't lose your trade, most of the time like this, you might buy from 70.5. But if you buy from 60, maybe you bought early, or you want to buy early, you can buy from 61.8. Then your stop loss will just be a little bit below the low here. Let's say 32 pips. This is your stop loss. Okay, this is your stop loss. You put your stop loss here. So I'm going to measure your profit for you now. 32 pips is your stop loss. Look at the liquidity point. So from that, let's say you're buying early. 32 pips stop loss. Okay, let's even say 35. 35 pips stop loss. Then you're anticipating the liquidity. That's 119. Let's say 120. Then also 30 pips above that. Let's say 20 pips, just for people that they are just coming into the strategy. 20 pips above it, that is 140. So this 140, that is what price? That is 126.70. I'm going to put line there. 126.70. Okay, this is the price level. We want to see possibly maybe the price got there. I want you to see. Can you see at this point you are out of the trade? You have gotten about 140, risking only 35. This happens often. This happens often. Now look at it immediately. Look at what happened at price again. Immediately price took that level, that 20 pips. Look at what happened. Price dropped. Even this one is tradable. I'll be teaching you in another seminar entirely. And look at it, it dropped heavily. That drop alone is also tradable. I'll show you how to do that. That's about 52. Look at it. That's about 52 pips. It's tradable. I'll show you how to do that. And that's exactly how to do this trade. I've just showed you a gold mine. What you just need to understand is this is what gives money. You look for double top. You wait for the last up candle. Once it's traded into, you wait for a drop down. Every time you'll be watching until market breaks structure. Once the market breaks structure, you take your buy. You don't need any indicator to show you market structure break. All you just need, you took out the low, it broke the high. It has shown you that market structure has broken. You take your buy from 61.8, anticipating price to hit that level. You can go out immediately from that level. Or you may take partial profit and wait for your 20 pips above it, or 10 pips, 20 pips above it, and you get out completely. This is the way you can make a perfect structure. What you have just seen is a perfect structure, and it doesn't fail. Most of the time, if you play out, it's about 90% assurance that you can get the trade. All right. Okay, I begin to see some questions. So if you want to ask question, I give you few minutes to ask question. So let's start it. Okay, will this not depend on your trading strategy? Also, the news moving the market at the point. Thank you for that question, Chris. Let me tell you something. The news already is the one that played this out. You see, let me tell you one very good truth. All this thing you are saying on the market is algorithm. It is actually the news that they use to play all this. They already know that the news, they already know the value of the news. That's why this play out. So maybe news or no news, what you just need is just structure. All the structure you see on the technical analysis is actually the news that formed them. So all you need is just structure. The structure will tell you what is happening in the market and in the world market. So you don't need any excesses. All you just need is the structure. The structure will tell you, and that is exactly the direction of the market. Maybe it's an order flow. Now let me tell you why this happened. You can imagine what happened to US, the unrest, the George Floyd that died, as a result of the police issues. Um, you can imagine what happened. You can also imagine what happened to um, um, a lot of um, the challenges between Chinese and Chinese and America. You can imagine what happened to them. So these are the things that actually created this problem. It created this problem, and the dollar became very weak. So as a result of dollar being weak, then it affected dollar, and why that's why all these GBP USD, they are rallying and they are rallying and they are rallying. Until they are done, dollar will not rally. And that's exactly what you have just seen. Okay, any other question? Okay, all right. So I want you to watch this video over and over again. If you have questions, please just ask your question. I'm ready to answer. Okay. Okay. All right. Dimeji, you are asking question. He said this break in market structure will be applicable to both scenarios, meaning resistance and support level. I mean at downtrend. Of course, that's the same thing. Uptrend, downtrend. Now, let me also make you clear. Structure break. Let me just demonstrate that on the platform so that you know what I mean by structure break. Now, market is going upward like this. Market kept on going upward like this. Market was going upward like this, showing that everything is good for that pair or that country. All of a sudden, after this market has taken out the whole eye, you just notice market came down and broke its low. What does this thing mean? It means that price just dropped suddenly to the point that price dropped below the initial price that was the prevailing price. And once price did that, then you will not look at when price will be, because a lot of people now be very skeptical. A lot of people will be very skeptical that what is happening in the market. So if price pull back to some point, the people that are buyers before that have been buying, once they see that this is breaking out, from once they see that this is breaking out from this and price is breaking the low, the buyers already, they are not interested again. So once they see the price pull back a little bit, they are getting out. All right. So once they see that the price broke this support level that drove the price up, now they are already losing. The people that they bought here, they're already losing. So when they see price come back, they're buyers. Once they see that the buyers, as a result of that, they are looking at the possibility that the market is already going against them. So if the price pull back, all the buyers will be taking their market closing at fair value. This is what we call fair value. They'll be thinking that let me just get out. Let me just get out. So as a result of this, if they close all their trades, it will only be left with the sellers in the market who will push the price down. At this very time, when price breaks this level, this very point, we say market structure has broken. Market structure has broken. Now, if you have a price like this, let's say, if you have a price like this, price structure like this, okay. Okay. Now that is forming double top like this. Remember that a lot of people want to ask me this question that, Moses, what if something like this happened? Remember that they have just formed this, they engineered this. They might not be coming to hit immediately. But the one I showed you on this one, it was created before. It had been there. So price had gone down. Now price is coming back. So that's why price went there to clear out that liquidity. So it's an old something. Now let's assume that they have gone down like this. They have done something downward like this. Anytime they are coming back to that point, then you are expecting that they are going to hit out that double top. But immediately like this, they may not come back. They may not come back immediately. So, but if they have gone down to take out the downside, once they have taken the upside liquidity, they will also go down to take downside liquidity. That's exactly what I'm trying to say. So at this point, market structure has broken. The only thing that will validate this market structure to still be bullish is when the price breaks this part again. If the price go ahead to break that part again, then at this point, market structure has broken. Where do you take your trade from? You wait for the price to return to that same level, again. Once price returns to that same level, that's where you take your buy. What I've just showed you now, I'm not saying that you should believe it. Go to the platform and see for yourself if it is not true. The price first took out the low, taking out the high, it has broken structure to the upside, simply mean they still want to go buy. I want to just let you know that this is just exactly how price move. I want you to see this. Look at what happened. See, after they have broken this structure, did you see them take out any low? Did you see them take out any low? You can see they have been going higher and higher and higher. They have not taken out any other high or any other low. Watch this. Watch this. Ever since they have been moving up since Sunday, did you see them take any low? They didn't take any low. They have been moving high until this place alone. So it is because they want to gather more strength. They want to gather more liquidity so that they can go and raid this level. That's exactly what happened. So I just need you to have understanding about this. You need to go back and check your chart. Check your chart. Take time to check your chart. You'll be surprised that this is just a good mind. All right. Another question. Still confused about how to know the point of entry. Where to place the exit points. Don't worry. If you watch the video again, I can't explain everything at once. If you watch the video again, you are going to get that. Just look at the video. You will see the exit point. You will see the entry point. Please confirm it's always smart to take profit. Some pips above the zero Fibonacci. Yes, but this time around, I thought this is a strategy on its own. It's a strategy on its own. Now, for example, you have marked out the liquidity point. This is the liquidity point, and that's the double top which you have marked out, and that's why this thing happens. So you already have that premonition that this will happen. So if you are buying here, you are going to hold the trade. But as the price breaks this old high, you may take some partial profit. As it move another, from here to here is about let me see, from here to here is about 60 pips. So you can take partial profit. If you move another 60 pips, you can take another profit. and then you wait. You just move your stop to somewhere to break even and wait. Hold the price until it has taken out that place. Once it takes out that place, that's when you will be ready to go out completely. That's exactly what I'm saying. I think I've been able to answer most questions. Just go back and watch it. I don't want to keep this video more than 15 minutes. And you'll be very surprised what you're going to see. I really appreciate your time. I want to say have a wonderful weekend ahead of us. All right. Thank you and have a good day.